Michael Lee joins us now. I mean, Michael, I want to get your comments on that first. It seemed like the markets kind of took in CPI. They took in strong retail sales in January, but now we get hit with another metric that shows us that this inflationary problem is just, beating it down is a real progress, is really taking slow progress, I should say, and we still worry about the Fed continuing to be hawkish, right?
Yeah, well, look, I think Jerome Powell needs to talk a little tougher if he wants markets to take him serious. And so what you're seeing now is inflation pop back up. Most recent, besides PPI today and the most recent CPI, used car prices had jumped the most since 2021. So we had a double top in the last inflationary cycle. And if the Fed isn't aggressive enough, the exact same thing will happen. And I think the market is a bit foolish to think that we'll get rate cuts this year and the Fed to lose its resolve. The Fed has lost an enormous amount of credibility throughout this cycle with the money printing and the elongated ZIRP policy. I don't think they're in the mood to lose any more credibility, so I think rates will most likely go higher than the market thinks and stay there for longer.
Yeah, and you say, look, the longer the recession takes to get here, that's why those rates will remain higher longer. I mean, when do you think is the recession here, or when does it get here, and how deep or shallow will it be?
Yeah, so I think if we were to get, you want kind of the Band-Aid to be ripped off. You want a quick, hard recession so that you can start your way to recovery. The longer this gets pushed off by capital markets anticipating the Fed cutting rates and meme stocks and Bitcoin and all these risk assets, letting the market believe that we're going to turn the quarter, allowing inflation, loosening financial conditions, allowing the market to believe that this inflation problem is solved simply means it's going to last longer. We need inflation at 2%. That's not an arbitrary number. If inflation's much harder than that for a longer period of time, it's a disaster. Remember, inflation not only destroys markets and economies, it rips societies apart by their fabric. So you have to take it seriously. When it comes, it's extraordinarily sticky. So I think we're higher for longer. I think you want to see numbers like the Philadelphia Fed today. You want to see higher unemployment so that we know we're on our way to killing inflation.
Some sobering words from Michael Lee today. That's the reality. Michael, thank you so much for joining us this morning. I do appreciate it, even though the news was a bit grim.